All right, welcome back to Reimagine. Here we are in January of 2021. We've made it through the 2020s, and you know what? We're continuing to bring you the great and amazing content. We've got such an interesting time that we're going through here. So much is changing and shaping the space. So I brought you now someone who himself is working to change and shape the space so importantly, none other than the Pomp himself, Anthony Pompliano. Anthony, firstly, thanks so much for being with us.
Yeah, thanks so much for having me. I'm super excited to do this.
Man. So I've got, there's so many things I could ask you, but I guess I want to start off by sort of saying, here we are, 2021. It feels like a bit of a light at the end of the tunnel. I don't know. And you might disagree, you might agree, and I'll be interested to know even that. But vaccines on the horizon. From a financial perspective, for good or ill, there seems to be stimulus checks and more stimulus on the way. We can dig into that. But it feels like there's been a turning of the page, a changing of the guard. Politics, of course. New administration in the US. I mean, what's your perspective? What's your thoughts on where we stand now in this moment? Give me your broad overview. What are you looking at? What are you thinking about?
Yeah, look, I think that everything is kind of right on track, right? And what I mean by that is both from the Bitcoin terms, but also global financial system. And there's really two things that I'm focused on at the moment. One is I think that we're going to continue to see significant and material adoption of Bitcoin. It was retail at first. Now we're getting financial institutions. We've just started to crack the seal on corporations. I think that we're going to see an explosion in corporate treasuries adopting it. And then eventually there'll be central banks. And that's going to continue to play out over the coming years. The beauty of Bitcoin is that not only are there structural advantages, both in the kind of finite cap supply, but also the halving mechanism. But now what we have is we've got an even bigger tailwind, which is you've got the legacy financial system basically running trillions and trillion dollars of marketing to essentially push people to go look at this asset. And so in the United States, for example, in 2020, what we saw the Federal Reserve and elected officials ran a $3 trillion marketing campaign that reminded people that your dollars will be worth less in dollar terms or in purchasing power terms over a long period of time. And so if they are going to erode away your purchasing power, then people are going to go look for other types of assets. And Bitcoin is kind of the beneficiary of that global game of FOMO and that global game of a scavenger hunt. And so what becomes interesting to me is Bitcoin is kind of doing exactly what I anticipate it to do. It will continue to be adopted, and eventually I think it will ascend to the global reserve status. Now, with that said, the second thing that I am becoming much more vocal about, mainly because I think it's an important conversation, is the decentralized, pseudonymous, digital, open financial system that we are seeing be built right now. And frankly, it doesn't matter if it's built on Bitcoin or somewhere else. The fact that we are going to have an open system where anyone with an internet connection now has the same accessibility to the global financial system as the Western world is going to be a massive inflection point in human production. And so what becomes very interesting to me is I think that there's an entire subset of the world, and they happen to be the wealthiest in the world, that have benefited from access, and they have benefited from all sorts of geographic and capital base advantages. But that is all very, very quickly being neutered, because now when you have this decentralized, open, pseudonymous kind of financial system, again, all you need is an internet connection and you too can participate. And so I think that those two trends, Bitcoin's continued adoption and ultimate ascension to global reserve status, and the continued build out of this decentralized, pseudonymous digital financial system that's open as default, is only going to further kind of perpetuate the end kind of scenario here. And that is that we are going to have a fully automated system where every asset is digital. And many of the legacy players are going to have most of their power and influence kind of offloaded. And we're going to have the pendulum swing back in the favor of the everyday person. And I think that that's what technology historically has done. And in this case, technology is going to kind of do what it's been doing for decades.
So, I love the long-term, like utopian vision, long-term vision of the power of decentralized assets, and as they come, as they develop, and as they're implemented. But like bringing things a little bit closer back to home, a little bit closer to where we are now. So throughout 2020 and early 2021, we saw that massive, hype rally up to 42,000 in Bitcoin at the time of filming. Although, who knows where it's going to be at the time that this actually goes to air. But like bearing that in mind, do you think that that's a consequence of some great tipping point in the market and a great tipping point of awareness, or is this just a reaction to the fact that we've had $3.9 trillion of stimulus pumped into the US economy, plus countless other stimulus across the rest of the world? Like, what I'm asking, I guess, is this because Bitcoin's doing well or because the dollar's doing poorly? And does that matter?
Well, I think with that, any kind of asset and market, there's no simple answer, right? It's not black and white. It's not either or. It's a complex system, and so you get both, frankly, right? One is the dollar is absolutely losing its purchasing power over a long period of time, and also over a short period of time. More than 20% of all dollars in circulation have been printed in the last 12 months. Two is people fear inflation. So whether the inflation actually occurs or not, they are moving capital based on that fear, or they're trying to front run any sort of inflation. And so assets like real estate, precious metals, Bitcoin, even stocks to some degree are benefiting from that. And then obviously when you look kind of in the inflation hedge bucket, Bitcoin is being recognized for a lot of the structural advantages that it holds. And so I think that becomes a really, really interesting kind of complex analysis where, frankly, as the legacy system continues to do what it's designed to do, right? What's happening in the legacy system is exactly how the system is built. Well, as that kind of goes further and further, you then also are going to see further adoption of Bitcoin because Bitcoin will do what it's supposed to do. And so what you have is you basically have these two systems that are diabolically opposed to each other in a structural manner. One is a fiat inflationary system. The other is a deflationary decentralized system. And so what people are waking up to the fact is that there is a better solution out there to protect my purchasing power. I don't have to go buy real estate. I don't have to go buy gold. I can go buy this new store of value that is a 10x improvement on a technology scale. And so I think that you're just seeing the legacy world push more people to go and adopt this. And I don't see that trend reversing anytime soon.
Right. It does seem to be a trend taking a lot of action forward, though I guess, and this is going to be an interesting thought. I mean, in terms about talking about reversing and a potential for reversing, I'm not trying to be like negative here or a doomsayer, but we got to consider all options. We've had already, Christine Lagarde, Janet Yellen, these major regulators coming out and saying, you know what, we need to crack down in some way or another. And again, I'm being reductionist here. I'm painting a broad brushstroke, but saying that pretty much Bitcoin needs to be cracked down on. We need to take this back. We need to, be careful. There's money laundering. There's all this stuff going on. Is it just, is this a one direction ship? Is there no way that if the regulators decide in Europe and the US, you know what, stuff it. We're going to crack down on this as hard as we can. It's not going to kill it. I think we all know that by now. You're not going to kill Bitcoin. But can't you really like stick some wound in, draw some blood?
Yeah, so I think that, first, Christine Lagarde as the president of the ECB and Janet Yellen as the nominee for Treasury Secretary, they absolutely have a broad mandate. They've got a lot going on, and they're responsible for big parts of the legacy financial system. And so they're important people. What I think that we have to remember, though, is those important people need to make decisions with accurate information. And so one of my favorite things to talk about is the illicit activity on Bitcoin. And the reason why it's one of my favorite things to talk about is because there's barely any, right? 0.4% or less of all Bitcoin transactions are illicit. 0.4% of an asset that is, call it, $600 billion, $700 billion. And so when you compare that to the fiat system, where it's estimated $2 trillion is laundered per year, that does not include terrorist financing, that does not include drug dealing, that doesn't include anything, just money laundering, $2 trillion. And so literally what we're talking about is there's 4 times more fiat currency that is laundered on an annual basis than the entire market cap of the Bitcoin asset. And then inside of Bitcoin, less than 0.4%, less than 40 basis points of all transactions are actually done from an illicit purpose. So the reason why I bring that up is because what law enforcement has realized and what criminals have realized is that if you want to do illegal things, you are better off doing it with fiat currency than you are doing it with Bitcoin. And what makes it even funnier when they bring this up is that we know it is a proven fact that the money laundering that is propagated by and encouraged and allowed to continue by the legacy banks, they are the largest component of this. When we talk about money laundering in the fiat system, we are not talking about money being, put into a business, changed hands, and then handed back to people on a black market. We are talking about money laundering through our financial institutions. And so what ends up happening is that regulators, because there's a public ledger, every transaction is put in a public ledger for anyone in the world to see and audit on the Bitcoin system. It's actually easier to get caught using Bitcoin than it is to use anything else. Right? The running joke is always, if you commit a crime, it's a crime. Unless you're wearing a suit, tie, and you work at a bank, then all of a sudden it's just the cost of doing business. And so what we've seen is, some of these banks have literally paid billions of dollars in fines for doing nefarious things over the last 10, 20 years. And again, that doesn't necessarily mean that, we should allow Bitcoin to be used for illegal things because the fiat's used for illegal things. It's just that when you look at it from a regulator's seat, if we want to really stop crime, if that's really the goal here, we should go look at the fiat system because that's where majority, like 95+% of all the criminal activity is actually happening with the US dollar in the legacy financial system. Now, that doesn't mean that we should just turn a blind eye to any illegal activity that happens with Bitcoin. But what we do know, right, is this new report that came out, less than 0.4% of all transactions are for illicit purposes. And so sure, if people are doing illegal things, enforce the law, but let's not allow an inaccurate narrative to persist, which is that Bitcoin is used for illegal things, because that's not true. And especially on an absolute or relative basis, that is not true. And I think it's important for us to continue to remind people of that.
Definitely important to continue to remind people of that. And but I guess, I don't know, my fear is that, and this has always been one issue with, with the decentralized nature of cryptocurrencies as a whole, right? Like Bitcoin has plenty of advocates. There's a million advocates out there, but there's no central company. There's no single lobby group, speaking for, with the one voice for Bitcoin. And while I'm sure in time, fidelity gets proven, whatever, my worry is that the septuagenarians, octogenarians, or whatever that seem to be running the world right now, they're not going to take the time to pare back, look at the technology, look at the raw data, and understand all of that necessarily before they just go out with the heavy-handed, regulation acts and start taking swings. I mean, what do we do to change hearts and minds? And do we need to go out there and put together a central group representing Bitcoin investors? I mean, what's the sort of approach from your perspective?
Yeah, look, I think there's 2 pieces to this, right? The first is, I think that the will of the people is really important, right? The government is there to serve at the kind of benefit of the people and serve the will of the people. And it is very clear that the market is adopting this, both from an institutional perspective, but also from a retail perspective. And so I think that's one key piece, is making that easier. Empowering people should be the goal of any sort of government or regulator, not trying to stifle innovation and prevent progress. That's a key piece to it. A second key piece to it is that ultimately when regulation gets created, there should be a democratic process in that creation of the regulation, right? Regulators should not serve as dictators in markets and simply say what we deem as best is what the rules will be. No, there should be a democratic process between the market participants and the regulators. There should be a dialogue. And I think that we see that with comment periods and all sorts of process-driven aspects of where we are with Bitcoin. And so the reason why I bring that up is because in that dialogue, in that back and forth between regulators and the market on proposed legislation or regulation, what we are seeing is a resounding response where people are saying, we want innovation, we want progress. We want to digitize, decentralize the financial system. And I think that regulators are waking up to this and understanding this is the will of the people. Now, whether they listen or not is an uncertainty at this time. But I think that they now are starting to realize this is something that people want. And the last thing that I'll say is it is a different game when you basically have a bunch of people on Twitter and Reddit who hold Bitcoin and are talking about it, than when all of a sudden you have Paul Tudor Jones, Stanley Druckenmiller, Fidelity, Renaissance, right? All of these folks who are not only actually participating in some form in the kind of Bitcoin and crypto economy, but they're then getting their clients and customers involved. And once they start to put time, energy, and money into developing a business here, you're going to get the benefits of their lobbying efforts and others to then say, we want to protect this part of our business. It's very attractive and it has high growth potential. And so I think that, there's a lot of fear and uncertainty out there. There's a lot of people who really, really want to kind of take the statist view of the world and say that the government will ruin everything and it will come down and it will regulate this out of existence. I just tend to think that people are overreacting. They're very, very uninformed in terms of what the potential positive impact of this asset will be. And I've got pretty deep conviction that over a long period of time, we're simply going to see Bitcoin continue to receive more and more adoption and eventually ascend to global reserve status, regardless of what kind of the bear thesis is.
Right, and I love that you brought in that institution, onboarding argument that's coming to play, because I think that's so relevant to the conversation right now. As we've seen throughout 2020 and as 2021 started, all these big institutional players starting to come on board, starting to make recommendations. JP Morgan now is, putting out their $146,000, target price, and all these sort of things are super exciting in the space. So looking towards that now, like, you've been such an advocate of the, get off zero mantra, this idea of, just get into the market, get people involved, give them that little taste, and they'll come back wanting more. Now that we've got these institutions coming on board, does that get off zero mantra, does that remain true for the retail user in your mind? And if so, more than before, less than before? I mean, has the ship sailed for some of those sort of more retail, home sort of body games and ideas? Or is this just a general rising tide will lift all ships?
Yeah, look, I think everyone's going to benefit from this. It definitely feels like the institutions are here, whether it is the large financial institutions on Wall Street, all the way to the endowments, the pensions, and others. I think that folks are very, very confused and tend to believe that this is kind of a small trend. There's a news story every time one of these folks joins because there's so few of them. But what we have to remember is that it takes a long time for them to make the decision and then actually execute it. So people who were buying Bitcoin in November and December of 2020, they probably made that decision at the end of Q2 or sometime in Q3. And so literally it takes time to, go out and go to the investment committee, do the work, present the thesis, get approval, then get your legal and compliance in order, get all the sign-offs, get your structure in place, go ahead and actually raise the capital, and then actually execute the strategy. And so that could take, 3 to 6 months. And I think that what we saw in November, December was kind of that end of Q2 or Q3 decision makers were then starting to buy Bitcoin. Well, in Q4, there's a bunch of people who made the decision. And so they're going to be buying into, end of Q1 and beginning of Q2. And so it's just going to continue here. But I think, again, that the really important piece to the institutional adoption is that the institutions that are showing up are not showing up with $1,000 or $500. Right. They're showing up with $500 million, $1 billion, right? Coinbase recently came out and said they've done multiple billion-dollar transactions for some of the largest financial institutions in the country. And so I think that we're just drastically underestimating what this asset is going to end up becoming. And it's simply because humans, and especially humans on Wall Street, think in a very linear fashion. Silicon Valley is a little bit better, but it's still hard for humans to think in an exponential fashion. But the exponential growth that we are watching here is absolutely insane. And so I think that that trend is just not going to stop, right? We're talking about tens of millions of people involved in this now. We're talking about the largest financial institutions in the world. you've got to have a pretty crazy thesis to believe that all of a sudden this is going to go to zero, or all of a sudden we're going to see some sort of drastic reversal of the trend. And the thing I'll leave you with is like, the thing I like to say is things in motion stay in motion. And this is in motion, and I don't see it stopping anytime soon.
I mean, it does seem to be in motion. It does certainly seem to be keeping up with, that classic, stock to flow model that we see. It's amazing to see this play out, seemingly in lockstep. And I always find that incredible, like here we are. It seems so much of this is driven by, actions that are occurring around in the world around us, whether that be, the coronavirus epidemic, whether that be, new liquidity into the large scale markets. And yet we're able to come back to some of these, mathematically, structured models that have been put in place for a long time and say, hey, this is actually making sense with this model. This is keeping in tune. Does that sort of factor into your mind? Does this play out into the longer term? And is this something that you sort of, reliably, sort of put into play when you're thinking about, sort of trading or the future of this market and the future growth potential?
Yeah, look, the things that I think most people worry about is they worry about the short to medium term. And it's just because their time preference is a short-term time preference. And so everything that you're talking about that has a short-term price impact, that's what people like to talk about. That's what they like to spend their time thinking about. For me, I've got this very fortunate position where I just think out literally, I try to think in decades, right? I probably, though, think more in like 10-year blocks. And so I just don't worry about kind of any of the short-term stuff, right? I literally just don't worry about it. And I don't know why that is, right? I wish I could tell people like, hey, here's why I think that way. And here's how you can do it too. I don't know that I can do that. I just know that I just have this long time kind of horizon that I'm looking at. And it keeps me very kind of calm during any of these market fluctuations, both positive and negative. Right. It's just, I have a thesis, I have conviction, I have a time period in which I'm looking at that from. And so I just kind of put all the short-term stuff in a bucket and then don't pay attention, right? In terms of actually letting it make me change anything I'm doing from an investment standpoint. Now I'm learning about it. I'm reading it. I'm doing all that kind of stuff. But the way that I think about information input versus investment decision is if you take inputs of short-term, information, and then have that affect your long-term investment, you basically have a mismatch. And so the only things that you should do is you should basically take long-term information inputs to affect long-term investing decisions, but you should never do kind of the mismatch. And so, again, that's the framework I use. I don't know if it's for everybody, but to me, that's how I'm able to kind of, make sure I'm up to date on what is actually happening in the short term, but not let it affect any of the actual investment decisions that I'm making.
Yeah, a very important principle, I think, to apply. And it's sort of brings me neatly to my next sort of question and topic, which is this idea of education in this space. Because, here we are, we're in the middle of a hype cycle. And as with every hype cycle we've seen so far in this growing, cascade, new people find out about it. People get excited. They read the headlines. They want to come make some money. They jump in quick without fully, reading up on what they're investing in, not being fully informed. Maybe they find some, small cap alt they think will go up 10x, 100x. And so they get overexcited and pump too much in there. People putting loans on houses. I've seen all kinds of crazy shit out there on crypto Twitter and beyond, on Reddit and all these sort of things. Talking to some of these people, and I want to come back to like this retail user in this space, these new retail users who really want to get in, and their first touch, potentially is going to be pretty fraught. And whether it be all those things I just listed or, rampant scams, hacks, potential like security issues, or else something as banal as losing your private key. Like, what advice can you give to these people in the space? What sort of direction can you give to someone who just wants to come on board and dip their toe and sort of have a good experience from the start to help bring them into the crypto space?
Yeah, everyone's got to have the journey, man. Most people come in because they learn about Bitcoin, then they learn about Ethereum, then they kind of go down the shitcoin rabbit hole. They'll make a stop at the mining side of the business. They'll make a stop at the enterprise blockchain. They'll make a stop at tokenized securities, all that kind of stuff. And so literally every single person's kind of been down the rabbit hole and gone through the journey. I think where most people end back up is like, okay, this Bitcoin thing is real. And like, that's going to be a thing. And then there's some variation of everything else, right? So some people really get attracted to NFTs, or some people get attracted to Ethereum. Some people get attracted to tokenized securities. Some people get attracted to whatever it is. I don't know necessarily if there's like a right answer. I do think that ultimately every stock, bond, currency, and commodity gets digitized over time. And so it kind of feels like we're going to move towards that world. And it's just trying to match your personal interest with your skill set and your experience on kind of how this market plays out. But I do think that the common thread is Bitcoin. I find very, very few people who kind of go down the rabbit hole, who kind of do the work and then walk away saying, you know what, I believe in X part of the industry, but I don't believe in Bitcoin. Like, that's just such a rare viewpoint to have. And so to me, it's just, we need as much experimentation as we possibly can get. We need much more innovation. We need as many smart people as we can working on this stuff. And so these companies that are hiring, how do we help them get their jobs filled? How do we get more high quality employees in the space? It's just all these things that I think are really, really important that people need to understand. Like, this is part of building a brand new industry from scratch. And so, let's go do the work so that we can all kind of see that end vision be realized.
Do you think, and I'm sort of wondering aloud here, but like, do you think looking at some of those narratives, you keep bringing up, Bitcoin, all roads lead back to Bitcoin as, the censorship resistant digital gold, it's taking on this sort of market cap equivalence to gold. And you've spoken a lot about, being 2x gold ultimately, or beyond even. Do you think that we've lost some of the initial narratives of, your peer-to-peer payments network and things like that? And does that matter? Like, I mean, is it okay for Bitcoin to evolve in people's minds and how it's used, or does that, risk losing the true, initial view of Satoshi and what the white paper really meant? Like, what's your take on that?
Yeah, so I think that what's interesting about this is, for whatever reason, humans are greedy. And the best way to get humans to pay attention is to show them a way that they can, quote unquote, make money. Right. And so one of the things that I realized pretty early on was the price will pull a lot of people in. So when the price goes up a lot of people come in. And then what they do is they stay, though, once they start to understand this stuff, right? How many people in the Bitcoin community didn't know about macroeconomics, didn't know about economics at all, didn't understand monetary policy or how money works, or why keeping a long time preference was so important, or that the dollar was devalued over time? Like, all of this stuff is education. And so they didn't show up and say, hey, give me a macroeconomic course, or hey, teach me about monetary policy from the central banks. No, they showed up and they were like, I think I'm going to get rich. Right. And like, that's why they started to pay attention. And so that's okay. Right. Like we should acknowledge that, yes, that's why a lot of people show up. But then what ends up happening is they end up staying. And they stay not because they're trying to get rich, but because they've been educated on a different way of viewing the world. And I think that's the important part. That's kind of the value. And so, my friend Marty Ben always says, like, people come for the money, but stay for the money. But they come because they think they're going to make money, and then they stay because they see what kind of real sound money looks like. And so I think that that's perfectly fine. Like, I don't think we should judge anybody for doing that. But I do think that we also need to make sure that we always preserve kind of that vision of a decentralized, open digital financial system that at the root, the core unit of account, or that reserve asset, is Bitcoin. I think that is kind of the world that we're headed towards anyways. So even if people don't talk about it, it's going to happen. But I do think that explaining that to people is important, because it shows the ethos. It kind of keeps people focused on what the ultimate goal is. And ultimately that'll just lead to a healthier ecosystem in general.
Right. And I find it interesting when you bring up that idea of what people come for versus what people stay for, because I think anyone who's spent any time in this space, and you, as a thought influencer and leader in this space, should be all too aware that this isn't just about investing, right? Like, the people who have been in this space up until now, and the ones who stayed, kind of get this sense of community from the crypto space, sense of otherness. People are telling them they're wrong all the time. They know that they've got the right idea, and they're able to keep pushing forward with it and be proved right over the fidelity of time and development of the tech. And I suppose I wonder, and I'm not making any judgments on any of the other communities that exist sort of online and out there in the space, but anything from your your flat earthers to your furries to your QAnon, to whatever it might be. Like, people are finding community online, right? And I think you just raised a really important point that with the crypto space, you find this community that fundamentally you end up with a massive education and a sort of a financial awakening, as it were. A lot of communities offer awakening, but this is a pretty powerful one. Could you speak a little bit to that point and what you think the influence of that can be in a positive sense, sort of as this phenomena continues to grow?
Yeah, look, the community is probably the most valuable aspect outside of the monetary policy and kind of the security of the technology, right? So you've got this asset, but if you remember, like, there's no company here, there's no centralized organization, there's no CEO, there's no person that decided to hire a marketing team, there's no revenue that is then used to run billboards, like any of that stuff, right? This is about as organic as it gets when you look at kind of how this technology and this digital currency has been shepherded through the last 12 years or so. And I think that we're just on the path where it's had a community that has rallied around it. They believe in the same things, and people find belonging in that community. And ultimately, the detractors look at that as a negative. But when you actually look at it from a positive, what you begin to realize is the reason why people are doing that is because they're finding like-minded individuals. They're finding people who want sovereignty, who want privacy, who want individual liberties and personal freedoms, who don't want an overreaching government, who believe that your wealth shouldn't be taxed by the government via hidden inflation. They believe that you should be able to simply go to work, get paid, and live a good life and not constantly feel like you're falling behind, right? You can't get ahead. And so when you put those people together, they realize that this piece of technology can solve those problems. And so they work together to see it come to fruition. I think it's a great thing. And we shouldn't be ashamed of that, right? We should be proud of that. I think that the community is only going to grow over time. We're starting to add some pretty big hitters to the community, right? If you kind of start looking around the room and say, hey, who else is in this community? Pretty impressive people. And so I think that that's all just a net positive, and it's just more writing on the wall of where we're going.
Do you think that as the community goes from like a little rebel outsider to like the insider, as you get this more mainstream adoption, this institutional adoption, and more people come on board, which with less of the history, less of the focus, and obviously everyone who claims to be an OG always says that about the next wave. Oh, they weren't really there, they didn't really see it, so on and so on. But like, honestly, do you think that with this next wave and maybe even the one after, we risk losing some of that sense of community and some of that that special sauce that made crypto so special? Or do you think it's all good from here?
I mean, look, I think there's two pieces to this, right? One is you're always going to have kind of variations to a community, right? Whether you're talking about your local book club that has kind of, we're all in the book club together, but maybe me, you, and another person are kind of like a subgroup of the book club, and we may meet a little bit more, or have a different view. Like, that's just natural community dynamics. And so I think we'll always have that, where some people are, really hardcore Bitcoiners. Some people are a little less hardcore Bitcoiners. Some people are more focused on the investment side versus the tech side versus, maybe some other aspect of it. And so I think that those subgroups will always exist, and kind of people will gravitate towards the subcultures in the community that they find most attractive to them or most aligned with them. But at the same time, I think that a lot of these new people who are coming in, we always forget humans are humans. And so many of the people who have come out in support of Bitcoin, once they understand it, they kind of get their pitchfork and get in line right next to the Bitcoiners, and they're ready to roll, right? And so whether you're talking about just go through a Cathie Wood, an Anthony Scaramucci, a Stanley Druckenmiller, a Paul Tudor Jones, an Abigail Johnson at Fidelity, like all these people, they're Bitcoiners, right? They have been the revolutionary or the renegade for most of their career. And yeah, sure, they're a little bit older, but this is just the latest revolution. They were at the forefront of the revolution 20, 30 years ago. And so now that they've found something new, they're ready to rock and roll. And so I think that that's kind of in the DNA of some people. And it doesn't matter if now they wear a suit and tie and they've got some cologne on and, they're rich. they're still a renegade, right? That they're still kind of that
Right.
revolutionary. It just so happens that now it's in a new space than it was where they first started, and people kind of look at them a little bit differently. But you got to be a little crazy to believe in something that has such a low probability, right? But has such a high asymmetry.
Right. Yeah, a little bit crazy indeed, and I think that speaks so much to the space and where we're at. But I wanna use this chance. Looking ahead, here we are. We're in 2021, as I said before, start of the year. So we're gonna pull a quick classic line and look ahead for the year. Anthony, what would you say are the major innovations? All these crazy renegades coming on board. What are the major sort of innovations, points of interest? Whatever it may be that you're absolutely looking out for, focusing on, or think will be the absolute highlight of the year to come?
I think a Fortune 100 company is going to put Bitcoin on their balance sheet. I think that'll happen. Does it happen in 2021 or maybe spill into 2022? I'm not sure, but I think somebody big. I'd even throw Tesla in there. They seem like the closest right now to potentially doing it, but somebody somewhere that I think would make a big splash in the public markets outside of Square or MicroStrategy will do it. I think that it is likely that we are going to see a lot more activity at the nation state level, whether that is continued mining by some of these nation states, whether that is potentially a central bank somewhere, maybe one of the nefarious or kind of fringe central banks saying, hey, I'm going to go ahead and I'm going to put this in my treasury or my reserve assets. That would be, kind of a big watershed moment. But other than those two major kind of milestones, I think the big thing is just time. The more time that passes, the more people realize what this is, the more people that realize it, adopt it, the more people that adopt it, the price rises in US dollar terms. The more the price rises, the more liquidity there is, the more liquidity there is, the more utility there is, the more utility there is, the more people get educated and adopt it. And it's just this continued cycle. And so I think it's just kind of look, it's a foregone conclusion at this point that the network effect has taken hold. The virality of money is going to take hold. And if you just zoom out and look forward really a long time, we know where we're going. The fun part is trying to guess, what's the milestones in 2021? I give you two that could happen. Maybe they don't happen. Maybe they take 3 years. The timing's always the hard part, but I think those are some that are just big moments that would really kind of drive inflection points.
All right, so I'll make you a deal. You speak with Elon Musk. I'll talk with the government of Iran. We'll get these guys on board, get them to buy a little Bitcoin, do it in a splashy way, and we'll pump this whole market to the moon and beyond. Anthony, I want to thank you for speaking with us. I think it's undoubtedly an exciting time. There's so much happening, so much going on, and people entering the space are into it for an exciting ride, no matter what.
Absolutely. Listen, thank you so much for having me. You guys are doing a fantastic job with these sessions, and so I'm thankful that you let me be a part of it.
All right. Thanks so much, Anthony. And for everyone watching, make sure you stick with us. So much good content still to come. Some of the most amazing interviews we've done over the course of this conference. So make sure you check it all out at REIMAGINE. Thanks so much for watching.